All right. Good afternoon, everyone. This is another episode of App-Solutely. Today, we have our wonderful and immaculate guest, Noble DraKoln, CEO, founder, investor, and we're going to talk to him about how to get an investment and how to specifically optimize your pre-seed and seed and potentially family and friends rounds. Hey, Noble, how are you
Hey,
doing?
hey, good to be here. Well, thanks for having me on the show. I appreciate it.
Oh, thank you for being here as well. I mean, it's a pretty much a great honor. I'd love it if you could do like a quick, solid intro and talk about just you, your story, what you do, and why you do it.
Yeah, I mean, why I do it. We'll start there. It's always the easy, right? Simon Sinek
Yeah.
was, you know your why. I started off homeless. I left home at 17, and I just had dreadlocks and a backpack, and I was trying to figure out what I wanted to do in life at that time. And I'd graduated high school early, and my parents wanted me to go to college right away. And my mom, because I was a single mom, she raised me all by herself, and her whole pathway was education was key. And but I was kind of burnt out with schooling at that point. I'd taken college courses in high school as well as part of junior high, and so I was just kind of I want to see what the real world was like. And so I pretty much I left home at 17 and jumped into investments. I got my license when I was 19 and a half. I worked for 2 years as an assistant to a broker. And for the most part, I never really looked back. I've written 7 books on investing and trading. I've been a keynote speaker around the world. My books have been translated into German, French, Chinese, Romanian, which is a fun story. And I've been on Fox Business News, Bloomberg, the like. So I've been involved in investments, uh, going almost 20, actually 26 years, almost 28 years, 26 years professionally, 28 years in the since the beginning. So it's been a long time being involved with the investment space and dealing with investors, both as a broker, as a hedge fund operator, as an investor myself, and um, working with family offices. So it's been a real interesting. And so the why is that I think everybody deserves a shot. I think
Mhm.
that people make the mistake of counting out those people who they assume shouldn't be in the room as not being the most qualified, or they make the assumption that because someone's background, because they're on the wrong side of the tracks, they're born in the Appalachians, their ideas or concepts aren't valid. The reality is everyone deserves a shot because no one knows where the next big thing will come from. And so I always prefer hard workers over silver spooners any day.
Oh, I definitely know what you mean. Yeah, I mean, even from our perspective, the people who work really, really hard. I mean, it's easy to say, we're going to put $500,000 into this app idea, right?
Hmm.
Or this tech startup, right? It's easy
Hmm.
to do that if you have it, but it's harder to just work at it and kind of get
Hmm.
into there and do exactly what you need to do to be successful.
Now,
What's
now,
your favorite
mind you, I
part of
don't.
it? Oh,
But mind you, I'm not. I'm also not a big fan of glorifying uh, uh, unnecessary work. Right? We don't want to have busy
oh
work.
yeah.
It's not. We want people who work smarter and who know how to spend money where they're supposed to and where they should not spend money. And that doesn't mean necessarily cutting corners. It just necessarily means that certain things just are not a necessity, right? But so there's that always that I'm going to tough it out no matter what, and you also have to know when to ask for help. So there's a lot of caveats that come with the hard working. Sometimes it's just having both street smarts and book smarts with a good work ethic. That's that kind of magic formula, that magic combination, particularly when we're looking for people to invest in.
So speaking about people that you're looking to invest in, I also know that you have a consulting company. Could you touch more about what you do on that side and how you help people?
Yeah, that became it was weird. It never really intended to be that way.
Hmm.
I What happened was I had basically retired from the investment world, going on about 5 years ago, almost 6 years ago, and I decided to really start investing in apartment buildings. And I then something hit me. I got the bug. I started learning about augmented reality, and I'm one of those people that kind of mulls over things in the back of my mind. And
Hmm.
my 3.5-year-old son was an inspiration for me to decide to file a patent on augmented reality and combining that with clothing and using that as a form of interactive gaming. And so when I filed the patent, I I kind of had said to myself, I've been dealing with retail investors my entire career. Let me start dealing with more institutionals, deal with the angels, the PEs, the venture capitalists. And part of that, when you start getting into the founder world, is you start joining accelerators or you start joining incubators. So I joined Founder Friendly Labs up in San Jose. They introduced us to Perkins and Coie, who's our attorney for our tech company. I joined M Accelerator. I'm now actually on the advisory board for M Accelerator, and we're doing a $50 million venture fund for our students who come through that accelerator. But at the time when I joined these organizations, I thought that that was kind of the pathway, right, to get introduced to VCs and angel investors and capital. And as I started getting introduced and interacting, I realized that that institutional world was light years away different from the retail world of investing. Many of those institutional groups were very focused on not only, which are good, not bad things, but they're focused on the cap table, how much they had on that cap table, and how much they could acquire from those early seed and pre-seed companies. And so, in an angel scenario or in a VC or PE scenario, it was always about very aggressive valuations. That if you were pre-revenue, you were going to end up giving away 25, 35% of your company for just a few $100,000. And
Yeah.
that's when it hit me that there's a reason why most people in that ecosystem are called founders, but not owners. There are a lot of founders of different companies, but most of the ownership falls really on those early stage investors and those people who've gone through the multiple rounds of investing all the way to Series E, oftentimes. And the founders, the people who came up with the idea, for to be honest, they've got equity in the company, but for the most part, they're employees of the company. So they really ended up becoming, turning something, a passion or an idea, more into a job. Those founders are very aggressive and very strong about maintaining equity. They do a great job of protecting themselves. But most
Hmm.
founders, what I've discovered, is they're just so grateful for someone to be interested in their idea that
Hmm.
they cut really bad deals for themselves in hopes oftentimes that they'll fail upward if this product doesn't work and they'll get a better deal next time. And that's
Hmm.
never been my world when it comes to investing. And so I what I did was, and I saw how that ecosystem was. What I
Hmm.
did was we started focusing on something called the Jobs Act that was introduced in 2012. And it was an update to a lot of the exempt offering rules and regulations, many of which, again, being a brokerage owner and being a trader investor, I was familiar with. But the Jobs Act had one particular division, or I guess a caveat of it, that was really unique, and it's called the 506C. And it allows you to talk to accredited investors in any way you need to, basically. So you can advertise and market your company, the fact that you're looking for investment. You can even do it right on your website, as long as the only people who invest are accredited investors. That was a complete shift, a complete 180 from in the past of being able to expose people to your project. And that's how, I've noticed all these crowdfunding platforms be immensely successful in bringing
Yeah.
people in. Um, but they use different forms of the law. So with us, we actually consult people on how to use the 506C, how to use it properly, and we actually even help them register it if they need to. More importantly, we have our own in-house database of about 900,000 accredited investors, which was kind of built off of my original group who had bought my books and who'd seen me on TV or even seen my infomercial.
Hmm.
So we find a whole nother pathway, and in that space, what we've discovered is that those retail investors are willing to take less of the company. And because you're offering preferred shares, there's really not as much active, and really legally, they can't have an active say in what the company does. They're more of a passive investor. They get equity and they get paid out according to the terms of your private placement. And so, for a lot of founders, particularly those looking for that early seed money, 5 million or less, it
Hmm.
becomes a great vehicle to get capital funneled into the company because you can raise an unlimited amount of money from an unlimited number of accredited investors and kind of get your sea legs on you until you get to the point of the automation of the business. So it's an exciting way. And this really just grew out of us having to do it for ourselves. We ended up
Hmm.
doing a successful Kickstarter. We did, I think, almost $300,000 total on our Kickstarter campaigns. Because we promoted it and marketed. We talked to private investors. We got private investors to back the initial iteration of the company, and using the 506c and the different people who knew me in the various cohorts, they just weren't finding that same type of success. And so that's just how this consultancy evolved, just out of organically, out of trying to help people find the capital they need without the same type of strings attached.
Nice. I mean, that's amazing, and I definitely see the problem in the current startup community, and where you have a cool idea, you give up 30+% of your company. You don't necessarily have control over the exact direction where you want to push things. Sometimes that could be a good thing, sometimes that could be a bad thing. But yeah, there are a lot of negatives that come with taking on investment, especially when you take on too much investment early on.
Mhm.
For a founder that does want to take part of the 506(3), what are the things that
The
they need to know?
506c, the
Sorry,
506.
506C.
Yeah, yeah.
What are the things that they need to know before jumping right into it? Should they have like a really solid product, or are they at just
So
the
people,
idea phase? Mhm.
yeah, I mean, so the 506c is pretty much an agnostic vehicle, right?
Mhm.
So there's no real requirement that you have to have an MVP. It doesn't. There's no real requirement that you are actually you could be pre-revenue, you could be post-revenue. It's the vehicle is just for you to be able to share where stage your company is and where you intend or expect to go, and it's the registration that you do with the SEC to be able to collect the check. There's always this disconnect when it comes to people wanting to raise money. They make the assumption that, well, if I have a business plan, people will just automatically give me the money. And that's not quite how it operates. You have to have what's called a subscription agreement. You have to have a private placement. And even if you're doing, even let's say you don't even do the 506, let's say you decide to do Y Combinator's safe agreement. It's the same thing. You should have a business plan, and you should have some kind of idea on where the company is going to go, regardless of what stage it is now. People confuse, and we were talking about this earlier, but people confuse the widget, the thing that they sell, as if that's really the business, and that's not the business. Companies pivot all the time. The widget they sold when they started doesn't necessarily mean that's the same widget they're going to have later on. Amazon's a prime example. It was a book reseller online. Now it's selling digital equipment, and it has its own AI. There was no draft in the original form of the business plan that accounted for Alexa, right? It was originally just a
Sure.
platform to sell books in an efficient manner, but now they're operating with their own AI, and they're talking about going to outer space. So, we have to understand that just because we sell a widget, that is not the business. The ability to pivot nicely is key. And then more importantly, just because you didn't get a degree from Wharton and you didn't get a degree from Harvard, or you're not a summa cum laude at some university,
Yeah.
doesn't mean, right, that the people who you bring on who invest and who are from Wharton and the Ps know more than you do about the project you're doing. We look at Steve Jobs as a prime example. His board kicked him out of the company. He brought some of the smartest people in the room to run and stabilize Apple, and they literally shoved him out of the company. But he was the only one who could actually bring it back from the edge of bankruptcy.
Yeah.
Had they not made the move to bring him back, and actually he forced his way back in to save the company. Had he not
Mhm.
made that move, there would not be smartphones the way we perceive them now. There would have been
No.
something, but the
We would be on
idea of black
Blackberries.
screen, right? The idea of a single glass screen with
Yeah.
a software that's elegantly designed, because that's always been Apple's push, that you can just touch and create an experience off of pressure. That was not on anybody's mind or radar whatsoever until the original uh, uh, iPod popped up, in which you're
Mhm.
using little spin dials and micro screens with a literally with a hard drive attached to it that you would portably carry. No one had ever thought that as an iterative design, and is definitely not going to be the CEOs and all the super smart people in the room who didn't have the creative foresight. So I say that a lot of times founders, focus on the wrong things. They're focusing so much on the exit, which is good. We're all taught, have you start the business with an idea and end in mind, that you want to be bought out, you want to, you want to go to the stock market, or you want to, whatever your exit is designed, right?
Hmm.
But unfortunately, that also forces a lot of founders to be myopic in really what it is and why they even got started in the first place. You come into this environment in which you've got to have a pitch deck that's 15 pages, that talks about problem solution sets, that has this kind of projections. Don't say too much. Don't talk about billions because you seem unrealistic to venture capitalists, but don't say too little because they won't think you're a unicorn. Then you've got to make sure that, all these things that they're trying to shove all these creative people into,
Hmm.
and then they say, now I want you to compete against the 5,000 pitch decks we receive every year, and we might go ahead and fund maybe 6 of you guys. It's such a bizarre system, and the reality is the founders themselves, because they engage in it, have
Hmm.
validated it to the point of where a lot of great ideas and a lot of real true innovation gets
Hmm.
wiped off the chessboard because they don't go out in pursuit of the capital outside of those realms. They make the assumption that friends and family, angel investors, VCs, that's it. Yet there's over 26 million accredited investors that don't fall in any of those, three categories or four categories, who have $9 trillion T with a T sitting around in IRAs that can actually be rolled over into your company as an investment if you do the paperwork properly. And you can find the capital you need to give legs to the ideas and visions that you have. And so I think that's really, if anything, I'd say more founders need to go from trying to be the cogs in the machine and
Hmm.
really focus on being the visionaries that they started out to be before all of their, before people start telling them the color in the lines.
That's true. Yeah, I definitely see that. I mean, it there's a lot of opportunity just in that space. But how would a founder go about marketing themselves to the investors in that space, to those specific funds? Well, not funds, but to those specific
Accredited
people.
to the accredited investors. How do you? The beauty of it is you can advertise. You can literally once you file your 506c, you can put out radio ads. You can put out ads on Facebook. You end up having carte blanche. You can have a section on your website, and I guess that also falls to the next problem, because particularly in the tech world, founders tend to be a lot more introverted in the sense that they don't want to promote or be in the limelight. But
Hmm.
part of the requirement is to have some showmanship in the business that you're promoting in. And it doesn't have to be PT Barnum style, but you have to have a willingness to share and focus on who you are. And so a lot of companies, and I don't know why it hasn't happened, majority of pitch decks and companies that have submitted business plans to me, they don't even have a video message. A video message from the founder goes so much further to explain who you are, what you're about, and what you're doing than what I just see on paper. Because, come on, let's be honest. All the stuff on the paper is make believe. It's
It's true.
projections, assumptions. It's using analogous companies to determine your success, even though none of the talent or skill that they have may actually be accessible to you. And
That's
it's
true.
using all these other metrics as opposed to you just being sincere, open, and honest about who you are and what you're about and why you're
Hmm.
doing what you're doing. That level of sincerity, if placed on someone's website, explain to people, goes so far and ends up attracting and pulling people in. The most successful Kickstarter campaigns have great videos, and those videos are not $50,000 productions. They're just oftentimes explaining to people why they should be backed on this product and incorporating people to be involved or enrolling people involved to get involved in your success. People like to root for the underdog. This is the funny thing. Founders, early stage companies, you are the underdogs. And America has been trained to love their Rockies. But the only way for them to know that is you've got to be the Rocky story, and you got to talk your story. You got to share your story. So, it's a combination of a lot to kind of untrain how people are being taught how to raise capital. But
Hmm.
uh, what I could say, and I could leave most people with this, is
Hmm.
that people make an emotional decision on whether to invest in you or not probably within the first, what do they say, 10 seconds. Blink.
Yep.
If you haven't read Blink, it's great.
Malcolm Gladwell, yeah.
People make instant decisions, right? And so if you don't automatically appeal to something in them emotionally, they will use facts and information to justify not to invest in you, regardless of how good the stuff displays or not. They will see and find all the flaws. If people like you and you've engaged them and incorporated them into your world, you've enrolled them in your success, they literally, and this is without politics, but they will literally vote you into presidency because you've pulled them in. No, really, because you've pulled them in,
Yeah.
and then they'll come up with facts to justify the emotional decision. And that's really what happens. And so they'll look at all the facts and they will create out of those facts the positives that made sense and what they did like. So there's nothing wrong with being likable. There's nothing wrong with people maybe not liking you, but loving your passion and loving your vision. But oftentimes, too many founders, especially startup founders, really don't know who they are. So they come into the scenario constantly trying to be chameleons, and it becomes a very difficult ability for me as an investor and to figure out who they are and if I feel comfortable putting money with them, because I don't know who they'll be in the situation if things do go sideways.
Okay, so from what I'm hearing, your ideal founder is somebody who's sincere, who has a story, who's willing to put on a little bit of sparkle and glamour to build up their story. Are there any other traits that you would see
Well,
in
like I
your?
said, but they got to put the work in too, right? We start off with the hard work. They have to be hardworking, right? They have to, and part of that hard work is them knowing what their limitations are. They don't have to learn everything. They have to have the ability to find the people who know more than them, and then have the capability. And this is the sparkle you talk about, to enroll other people in helping them to make the project or the idea come to life, because they know they have the limitations. So, the person who wants to be the smartest person in the room is the guy I'm always concerned about. The guy who's willing to admit he isn't is the guy I always like to lean towards.
Nice. Well, that's good. I definitely like that. I definitely know that some of our listeners who are commenting, they could definitely benefit off of that specific nugget. I do want to switch gears a little bit, because we specifically focus on tech founders, and all tech founders want to build the future. What are some of the future opportunities that you see that a lot of people are undervaluing or don't necessarily take seriously, or they think that they have to build like the next big thing? What are some of the things that you see that are coming up that people are just ignoring?
Yeah, we were talking about it earlier, and everyone keeps acting as if there's going to be this big surprise with AR, that they're looking for this next big thing. And we just talked about it. Hundreds of millions of people who actually have one of the most stable AR systems on their phones, and that's Snapchat. And you have to put it off, or literally tip your hat to them, because they've convinced people to use filters and all kind of AR activities without people really understanding that they're using AR, that they're augmenting reality with digital information in real time. And that's a really awesome space, and that's a space that I'm the CEO of, and I'm going to stay in. But also, the other part of it is that people really have confused the crypto space in a big way. Bitcoin, Ethereum, Litecoin, these ideas of these currencies have missed the boat in a lot of ways in really getting people to understand that those are really just byproducts of something else that's more important, and that's the distributed ledger technology, the DLT that's behind it. And because the DLT is so important, being able to create a true digital footprint for a product from source to finish, there's a whole swath of ideas and concepts that lay or overlay on that we still can't comprehend. Non-fungible tokens is one of the hottest spaces to date, in which the actual token that's created has no currency value. There's no one for one, but has an aggressive collectible value. And that space literally is in its infancy. And people, imagine ICOs. Had you got involved with ICOs right when they began, how many tokens you would have now that you would have completely exploded on. because you would have been at the beginning. That's really where the NFT space is right now. People are just now comprehending that it is so great to hold an NFT of a collectible, whatever that collectible is, that has a value that exceeds the value of just having the token itself. The token is not like trading one Bitcoin for $9,000 or maybe tomorrow trading it for $1,000. That particular collectible is fixed and it's based on other people's desire to want that collectible. So limited edition prints, people are, one of the groups that I'm familiar with, BC Heroes, they just did their own card deck. Let's even talk about, because we're techies, so we're all kind of nerdies, right? Let's talk about William Shatner. He made a collection of his own photos from his lifetime of his career, put them on the NFTs, and within 8 minutes sold out over $100,000 worth of digital collectibles. There's no physical correspondence, but the digital collectible that can then be sold, shared to other people who want these special cards that can't be found anywhere else but online in a digital format. That's insane. So and BC Heroes did the same thing. They took blockchain figures, made them into like superheroes, and made these awesome cards, and then put that out into the marketplace. So this space is bit by bit nascently growing to the point of where I have no doubt that someone will take a NFT version of a Rembrandt, take a complete digital, almost photorealistic version, one of the best prints ever, put it as a digital version, and then sell that NFT to someone who can, in AR, drop that NFT in their home and literally own one of 1,000 original Rembrandts in their home. So these things are bit by bit starting to evolve. And as we know, AR is getting more accessible. They're getting smaller glasses. Our world is going to fuse into this whole Web 3.0 a lot faster than we think.
Yeah, I mean, we already see it. Definitely with the point with Snapchat, everybody is using Snapchat. Everybody's doing the photos. Everybody's getting more comfortable with saying, "Oh, look, I'm an anime character," or "Look, I'm a volcano." The other day, I posted a video.
Look, I'm Green Lantern. There we go.
Oh yeah, I'm Superman.
This is the superhero edition, guys.
I mean, yeah. I mean, to be honest, why can't a new superhero movie come out and say, "Hey, look, we have 100 specific NFT tokens that we're giving out that only drop on the day that we're releasing the movie, monetize that, and now you have a special."
But hold on, and that NFT now is the director's cut, right? That NFT is and it's a super director's cut that the only way you'll be able to get it is by getting this NFT. Yeah. That's what the power of the NFT allows, the non-fungible token. Because how the information that's distributed can be distributed as a document, it can be distributed as a digital JPEG, it can be distributed as special audio, it can be distributed as an actual film or video. It doesn't matter what the NFT, quote unquote, is. It's just showing on the blockchain that this item is equated to this code, and only way that you can own this item is if I sell it to you or I give it to you. And that's how crazy it could be.
Yeah, that is definitely the future that a lot of people don't see, but who knows?
Well, see, this is the thing, right? And we've turned into a nation and a society that owns nothing. This is a part that people that people keep forgetting. The Generation Z has been taught to lease and rent everything. If you need a car, don't buy a car, go use Uber or Lyft. Or use some of these other apps that allow you to, quote unquote, rent the car by the week. If you need a home and you don't want to go to a hotel, go to Airbnb. If you want to listen to music, don't buy the CD, stream it. We'll stream the music to you, but you don't own it. If you want to watch any kind of media, you don't go out and buy DVDs of the latest movie. You just stream it on your TV. And then sometimes you'll get an option to spend 5 times more to own it digitally. So in a world in which you don't own anything, it becomes more and more valuable that the things that you do own will be collected digitally in an NFT format. This is the only way that you'll be able to preserve and show your wealth. because now they've got us on a subscription model. You literally have subscribed your life away, in which you're getting chunks bitten out of you at $8, $6, micro chunks, but that add up to a whole bunch. So NFTs become the way to truly aggregate wealth. Like when you start projecting outwards and really are futurist in understanding where we're at now and where people are going to be, NFTs are going to only gain in value, so that the next time you watch your Spider-Man movie and you don't want to just quote unquote stream it on one of the services, you'll click on the button and you own the NFT of it. And that NFT will let me and you sell it, and you'll be able to generate money off of it, because now you've got one of 5,000 collector's editions of the last Spider-Man movie. Right now, nobody owns anything. So really be cognizant, whomever's watching, that this is where we're at now, and there's no store of value. This is why millennials have a difficult time buying homes. This is why Gen Z is going to have a difficult time establishing wealth and buying homes, because they don't own anything. But if all that's converted into digital assets that can be sold and swapped and can increase in value as collectibles, not as currencies, that's when they'll start building up a solid base of wealth.
I love that idea, and I'm super excited to see this happen because, yeah, we don't own things, but the major point that you made is that this thing that you have will always accumulate value over time. There's never going to be a point where that special edition of Spider-Man is the value of the special edition of Spider-Man is unique. It can't be duplicated. It can't be faked. It is just a thing that has and accumulates value. Cool. So let's talk about let's talk about you. How can people work with you, and what is the type of person that works best with you?
How can people work with me? It was the first question.
Yes.
Is that what you said?
Yes.
Anybody can work with me. I think I'm easy to work with.
Well, I mean, if they want to be part of your client base.
Yeah, I mean, so if someone wants to engage us and hire me as a consultant, it's pretty easy. Reach out to us, share me your pitch deck, share, and then schedule a time on my calendar. The easiest way to reach out to me is always LinkedIn. Reach out to me on LinkedIn is to kind of start the relationship, and I'll send you a link to set an appointment, and we'll kind of talk. If you're looking to, potentially get investment from our current venture fund, then I would tell you you have to become join one of the cohorts at Accelerator, because we're only funding anybody who comes through our accelerator program. It's because it's called the Accelerator Venture Fund 1. And so if you become part of our cohort, one of our cohorts, then you'll have the opportunity to potentially get invested in by our fund. And if you're looking for collaboration, then I'm always open. My ear's always open to collaboration. I say no a lot, not because the idea is bad, it's because my bandwidth is small. I've got 5 children. My oldest is 23, headed to medical school, and then I got 21, 9, 4, and 3 after that. So 4 boys in a row, and then finally the girl. So it's not. So if I say no, it's never been particularly because I don't like a project. It's just that when I look at it, the price cost analysis just doesn't fit my personal profile, and so I'll decline or turn it down. And if I have someone who I could turn you on to, I'm always want to introduce you to someone else if I can. Our gaming company, Wordplay Games, we're always in pursuit of good game developers, and we're always looking for games to acquire. So if you've got a decent game that's already built, then we're open to acquiring it and then putting it under our banner. It's that's really it. I mean, I don't really have any special type of person to work with. I'm open to work with people who are just good people. And we always forget that at the end of the day, that's who we want to surround ourselves with, right? Just nice, good people who are doing the same thing. They want to feed their family. They want to leave a legacy. They want to help to improve the lives of the people that they touch. And, if we can accomplish those things, then we can all work together.
Definitely. Well, you heard it from him, everyone. We do have his LinkedIn in the show notes, so please feel free to connect with Noble. And I definitely want to say thank you so much. You've dropped so many gems here. This might be a Sonic game. What's we're done. But as usual, thank you so much. Thank you for your time. Thank you for spending time with us. And I definitely hope that you get, something great from this.
Oh, wait, listen, I already got something great. I met you. We
Oh,
got to,
okay.
we got to take our blessings one step at a time. Everyone's so focused on the future, you just got to appreciate the now. So, no, I had a great time. I appreciate being on. Thanks for inviting me, and I look forward to you having a lot more great episodes. And look forward to seeing your show, your show blow up.
Oh,
Joe Rogan shouldn't be the only one getting a couple, $1 billion for talking to people.
that's yeah. Oh yeah, that's true. That's true. Oh, you heard that Spotify?
Uh-huh.
All right. Thank you again, Noble, and we'll see you around.
All right, have a good day. Thanks a lot.
Take care.